Ladies and gentlemen, welcome back to the number one most valuable real estate community in existence. Today we've got on the one and only Trent Ellingford coming back again to share with us his experience in commercial real estate wholesaling and investing. Trent, thank you so much for joining us again, man. I know that we chopped it up the other day and we got all of this coordinated super fast. This is going to be an action-packed, instruction-based podcast that somebody can listen to and immediately take action to go and get to their next commercial deal. Ladies and gentlemen, if you haven't already, make sure that you're subscribed to the YouTube channel. Click the subscription button, give us a like, and drop a comment letting us know what your biggest takeaway from this interview and podcast was. This is going to be a hands-on training full of information. So without further ado, Mr. Ellingford, how are you doing tonight, man?
I'm doing well, man. Yeah, thanks for having me. And like you said, we put this together really quick. And as you and I spoke, it was like, okay, how can we deliver the most value? And so what I did, as you and I discussed, it was like, let's just break this down. If you're starting kind of from ground zero, you don't know where to start. I know some of you have residential experience, wholesaling experience, but if you're looking to take that step into commercial, what does that look like and how do you do it? And obviously, look, I can't teach everything in an hour or whatever, but guys, we're going to give you a lot and some just takeaways that you can start implementing immediately.
Awesome. So I'm sure a lot of people that are hearing about commercial real estate for the first time don't really understand, what makes a deal, or even where to start in terms of finding a deal. Let's break it down, for the people that are in here, the people that are ready to actually take action. What would you suggest that people do to actually start building up a pipeline of motivated leads? Like, who are we going after? What are the types of properties that we're looking for? What are the characteristics of motivated sellers looking like? Like, how are we going to find these deals?
Yeah, hey, good question, and I'm going to answer that. Just stick with me, okay? This will be kind of, I'll circle around to it. Because you touched on something, I think a lot of people don't know where to start. I think really some of the biggest things that hold people back is, number one, how do I find an off-market lead? Like, where do I even start with that? Number two, okay, I found somebody who's willing to sell. What makes the deal? Like, how do I determine the value? What should my price point be? It's one thing if you're buying it, but very similar if you're wholesaling it, right? But you need to be able to have a margin so you can move it and make it attractive to an end buyer. So how do you determine what that number is? I mean, other people have questions about due diligence and earnest money, proof of funds, kind of those things as well. Those are much smaller roadblocks in my opinion. So let's start with like, okay, where do you generate leads and how do you find it? Because, and I don't know if you mentioned this or if this was sent out, I put together a folder that we're going to share with everybody here that's in attendance. I put a ton of material in there, some different resources, and really just kind of the outline of the curriculum of what I want to cover on this training. And so let's start with the two most important KPIs. The two most important KPIs are, number one, how many offers are you putting in? Number two, how many offers are actually being accepted? Because if you don't put in any offers, no offers get accepted. And if you don't get any offers accepted, you're never making any money. So what the hell are we doing, right? We're just spinning our wheels. We have to get deals to contract. And we have to move those contracts. That all starts with leads though, right? Because if you don't have a lead, you're never going to be able to underwrite it, negotiate it, and get it to contract. So where do you get your leads? Let's start with kind of breaking that question into two pieces. First one is commercial is much broader than residential. Residential, a house is a house is a house. Commercial, I mean, we have industrial, we have flex, we have RV parks, mobile home parks, self-storage facilities, office, hotels, multifamily. So the first thing is to pick one. I can't over recommend that. Pick one and go deep before you go wide. Otherwise, because each one has their own language, they're underwritten a little bit differently. They have a different subset of buyers that you're going to be marketing that property to. And if you're bouncing from self-storage to multifamily to office, it's the quickest way to get nothing accomplished. I mean, what's the saying? A dog that chases two rabbits catches none. So pick one. Then you want to start calling on it And as you're doing that, you'll get really good at it. You'll start to learn the language. You'll start to understand the asset, what questions to ask them, how to underwrite it. Now, when it comes to actually getting data, there are similar approaches that you would do in residential. You know, if you pull data, let's say from PropStream or Batch or something like that, there are different software programs. There's CoStar, there's Reonomy, there's Crexy now. Crexy is kind of like the PropStream of commercial real estate. Those are all places that you can download a list, and then most of those software programs actually skip trace it for you. So you don't need to send it to a third-party skip tracer, although it can be worth it because some skip tracers get information that others don't. So you may want to double skip trace it. That's effective. But this is going to surprise a lot of people on there. Hands down, the most effective way for us, it is still our bread and butter. We pull the majority of our off-market data from Google Maps. That's it.
Expand on that a little bit, because I'm sure there are probably people that have questions like, how are you finding these leads on Google Maps? Like, what are you looking for on Google Maps? What are we looking for?
Sure. I'm going to try and share screen. I'll just show you.
That'd be great.
All right, I got to open up a window first, guys, and then I can share this with you. I think I have Google Maps on here. Okay, perfect. Everybody see the map? Are we in business?
Yep.
Okay. So let's, we can talk about how we target markets, what we like to target. Again, there's so much to go through, but when we're looking at assets, what maybe boxes do we want it to check? But let's just go super, super simple here first. And I like to keep things simple. Don't like to overcomplicate it. So let's say that we decide we're going to look in Georgia, and we're interested in the Macon, Georgia area. So I'll just type in Macon, Georgia. Google Maps brings up Macon. Click over here on nearby. And then let's say the asset I'm going after is self-storage. And there we go. See if I can do it on this. Can I do satellite view on this? Yep. Okay, great. All right, so here are all the pins of the different self-storage facilities, right, that are here in the area. Easy to pick out. I can click on those, bring them up and take a closer look at them, what they are. But the other cool thing is over here on the left-hand side, I have all the websites. I have the ratings. I have the address of the property. Maybe it's going to stand out they don't have a website, which tells me they're less sophisticated. They're a little bit more mom and pop. So what I can do with all of this is just start building a list, right? It's free data, and you're going to find more data through Google than you are through pulling a list. Now, some may be concerned that it's time consuming. Yeah, it takes time to build the list. If you're doing it yourself and you're pulling them one by one, maybe I want RV parks. I mean, we have 6 parks under contract right now that are in Dispo and a couple storage facilities. So there we go. There's all the RV parks. And guys, I can pull in on certain pins with satellite view, and I can count how many sites a specific park has. I'm out. Where'd my parks go? That's not it. Emerald Mobile Home Park, which is different than an RV park. But we like mobile home parks too. I can zoom in, can obviously tell that this is mobile home park, start counting that. Let's add this to a list. There are different data scrapers that you could add to help speed up that process. We actually just pay VAs $4 an hour to just scrape data from the web and build our list for us. That answer your question?
Absolutely. So
Yeah, sometimes less is more. I like this. Look, it's a tough business, but when you break it down, it's actually a very, very simple business. You got to get data. You need to make contact with sellers, see if they want to sell, get financials, underwrite it. And you don't have to have as much data. Like, I don't have to pull a list of 10,000 people to find a deal. I could have a list of a couple hundred property owners, and I work through that. I call through that. I'm going to find a deal. I'm going to find a deal in there. And so follow up is key, multiple touches, building a relationship, getting the P&Ls, getting the financials, understanding how to underwrite it, how to structure your offer, how to position yourself and articulate your offer. Numbers don't lie if you know how to articulate it correctly and why your number works and theirs doesn't. But back to your question, something you asked is, how do you find motivated sellers? This isn't residential. When you're wholesaling a house, it's typically tied to something bad happening. I mean, in most cases, right? There's behind on payments, it's a default. Maybe somebody's lost their job. Maybe there's a death in a family. It is a distressed seller. Commercial's that's not the case. Occasionally, you might come across somebody who's distressed and they have to sell. That's rare. Your typical seller is just somebody who hasn't decided to sell, because if they decided to sell, they've listed it with a broker. But it's somebody who's maybe thought about selling. They're in their 70s, they're in their 80s, they've owned it for years, and they've thought about it, and you make contact with them and start having a conversation. And they said, yeah, you know what, now's maybe the time I'm going to sell. And so we don't filter our list. With residential, you're going to filter your list. Maybe you want non-owner occupied, out of state, maybe you want it in default, you want a divorce, you can put all these filters. Well, there's millions and millions of houses. Let's just use self-storage as the example. There's only 50,000 self-storage facilities nationwide. I'm not going to filter that data except for maybe taking out the institution, the hedge funds stuff. I'm going to take out the Cube Smarts and the U-Hauls. But outside of that, we're calling them all. We just call all of them.
okay, so we're going on Google. We're literally searching on Google RV parks. We're looking for self-storage. What are some of the other types of assets that we're looking for? I know you mentioned there are multiple types of assets within the commercial realm. What are some of the other assets we might be searching for?
Yeah, multifamily is great. And look, they all have their pros and cons. It's not that one is necessarily good or bad. I would just say pick one and stick with it. And I'll give you an example. Like RV parks, they do have the least sophisticated owners out of all the other assets, without question. Doesn't mean they're not sophisticated. They still own commercial investment, but it's less sophisticated than your guys that own self-storage facilities or large apartment complexes that are syndicating or have funds. You're going to get a lot of mom and pop owners. So what that means is it's easier to get to the owner, get to a decision maker, and have a conversation and get it to contract. There's also not as many buyers for RV parks. That's growing, but it's maybe a little bit harder to dispo, where multifamily, on the other hand, is much more difficult to get to the seller because they're sophisticated. They may have multiple LLCs. They have a property manager. They have different gatekeepers that you have to get past to get to them. But when you get to them, if you can get a good deal, the numbers make sense, you get it under contract, guess what? There's a ton of buyers because it's such a hot asset for multifamily. So it's a little bit easier to move. So pick one. I would say I would start with one of those, either RV parks, mobile home parks, self-storage facility, or multifamily. If you're doing multifamily, I would do 10 to 50 units, maybe 10 to 70. Once you start to get up above that, you're going to get a lot more sophisticated owners. You get above 100 units, you're competing with the hedge funds, the REITs. And so the lower hanging fruit is going to be the smaller unit size.
Got it. So 10 to 50 units for multifamily.
Yeah.
Okay.
Yep.
All right. So let's talk about what the numbers really need to look like in terms of maybe like a cap rate, what type of cash flow. Because to kind of break down a good deal, we've got to understand what buyers are looking for, right? Because that's where we can go and negotiate and actually bring them something of value. So, what are buyers generally looking for in these different types of asset classes? Like, let's start with self storage. What is somebody that's looking to buy a self storage building or company looking for in an asset in terms of cash flow, cap rate, um, units? I know that you just said 10 to 15 for multifamily, but like what are these numbers look like for each of these different asset classes?
Yeah. So we'll start with storage. Uh, you're going to have the most amount of buyers if you can be that 25,000 plus net rentable square feet. That's probably going to be a couple hundred units plus. But look at the net rentable square feet. Can smaller stuff move? Yeah, it can. If you get too small on any asset, it becomes much more difficult to cash flow because you don't have enough income to offset the expenses. And if you think of your larger investors, they're investing nationwide. They're not living there managing that property, right? So they're going to have marketing costs, accounting costs. They're going to have on-site property managers, maybe an on-site and an off-site property manager. So how do you absorb those costs? We absorb those costs with size. And so if you're 20, I like 25,000 plus, but at least 20,000 plus net rentable square feet on storage, that's going to be attractive. You want to make sure it's not in a floodplain. Uh, there's all different types of buyers though for every asset. Like you have those that want something stabilized, you have those that want something that's value add. You have opportunistic investors, which will come in and buy what I call a dead asset, something that's not performing at all, meaning there's no income on the property. They're taking on more risk, but if they can get it fixed up and get it leased out and get it stabilized, there's a much, much higher reward. But here's where your biggest, if you're casting a net, what's the biggest net? Here's what buyers want. On storage, they're probably going to want an entry cap of about, let's just say 8 for easy math. And if you want me to break down cap rate and how to determine cap rate, more than happy to do that. It's actually really simple for those of you that maybe don't know how to do it.
Okay, let's
They're
do
going
that
to want
since we're on
cash.
the topic of cap rate. Let's talk about how do we actually understand what a cap rate is for a building.
Sure. I'm going to share screen again. Some of you maybe know this, some of you don't. So let's go through it for everybody. Value on commercial real estate is not like residential. Residential value is based on comps, right? What other similar properties are selling for, and that's how value is determined. On commercial, it all comes down to the numbers. It's the income it produces. The more income it produces, the more it's worth, which is what I love about commercial real estate. It's not emotional. If we can take a property that has an NOI, net operating income of $100,000, but improve the operations, maybe there's different value add opportunities. The rents are 50% below market. We can raise the rents. Well, that right there could double the value of the property. Filling vacancies, expansion, all these different things can increase the income, which in turn increases the value. So a lot of different things that we look at on commercial. The first thing I always look at is cap rate. So to determine cap rate, the first thing that we need to know is the GOI. Okay, that stands for gross operating income. How much income is coming in on that property on a yearly basis? So we annualize everything. Let's say that, and it's all the income. The rents are going to be the biggest amount of income, but for example, an apartment complex could have vending machines, washing machines, maybe they charge for parking, they charge application fees, they charge late fees. Those are all different ways to increase the income, in turn increasing the value of this property. So what's the GOI? Let's say a property has a gross operating income of 200K. So it's bringing in $200,000 a year. And then his expenses, let's say there's 70 grand, $70,000 in expenses. You know, that's your property management, that's your marketing, that's your landscaping, just everything that goes into operating this property. That's going to leave us an NOI of $130,000.
And NOI is net operating income.
Net operating income, correct. Net operating income. Now, properties trade. Basically, what that means is they sell for. Commercial real estate kind of has different language. You want to know what other properties in that area are trading for. So I know if this is in Scottsdale, Arizona, a very prime area to live in, it's an A-class property. This thing's probably trading at a 4.5, maybe a 5 cap. That means people will buy it at a 5% rate of return. Where if it was trading at a 10 cap, that's a 10% rate of return. So how do we determine cap rate? We take NOI, okay? We take the NOI on a property and we divide that by the price. So for easy math, for example, if we bought this for 1.3 million and the NOI is 130,000, 1.3 million divided by 130,000, well, that's 10%. That's a 10% cap rate, or short for capitalization rate. So that's the rate of return that the property is kicking off. Does that make sense?
Absolutely. And ladies and gentlemen, let us know in the side chat that you're following along with us. This is very important. I hope that you're all taking notes. You got to be actively paying attention and participating for this to really stick with you.
Yeah, and as I'm going through this, I don't know if people can ask questions in the chat or whatever, but I'm more than happy to like slow it down or dig a little bit deeper into something. Everybody understands it. Plus the resources that I'm sharing, guys, there's a ton of information in there. You just take a little bit of time to dig through them and go through them. That explains a bunch. And if you don't already, here's a shameless personal plug. If you don't follow me on Instagram yet, just give me a follow because I'm always sharing information on there as well.
Absolutely. We got to get the Instagram in the chat, ladies and gentlemen. Somebody drop Trent's Instagram in the chat, please. So now that we understand how to find the cap rate, and you're telling us that for self-storage units, investors typically want to be walking in at an 8 or above. So an 8 cap or above. Is that correct?
So that would be great. Look, can we move it for less than an 8 cap? Potentially, yeah. But let me just break that down and show you how we would do that. So self-storage, we're going to move that at a 10 to 11% cap rate. So that means we need to get it under contract at like a 12, 13, 14% cap rate. The cap rate, the lower the price. The higher the cap rate, the higher the cap rate, the lower the price. The lower the cap rate, the higher the price. So it's inverted. But there's other factors that would go into play on self-storage. This is why I said pick one, because an RV park, buyers are only going to buy on actuals, what it's actually generating. It's actually bringing in $200,000 a month. The expenses are $70,000. The NOI is $130,000. We want to buy it at a 10 cap, so I know the most a buyer is going to pay for that is $1.3 million. There's variables with self-storage and multifamily. They'll buy on value add too. Okay. It's not performing at 130K yet. It's only at 100, but we can push it to 130K in the next year, and they'll pay a little bit more. I don't want to convolute this to make it confusing by going all over the place. That's why it's good to just pick one and stick with it. So let's say this. I want to answer your question, then I want to show you something else. If we know that we want to get this at an 8 cap, because market cap, meaning that's what other. If a broker listed it, other self-storage in the area sells it a 6 cap. I'm not a broker, I'm a wholesaler. My buyers buy from me because I bring them deals. So if I can have this at an 8 cap, I have a deal. If I have it at an 8 cap with value add. So in a year, they can push it to a 10 cap. That's a great deal. Well, at a 10 cap, it's 1.3. If we need to get this at an 8 cap, oops, try that again. We need to get this at an 8 cap. Well, it's actually really simple. We know what the NOI is. So let's just take 130,000. Where's my phone? Take 130,000 and divide it by 8%, or 0.08. And I don't know if you guys can see that, but 130,000 divided by 8% is 1.625 million. So that would be what I could dispo it at. So if I can dispo it at 1.625, I want to get this thing for 1.3, 1.4, because that'll give me a $200,000 to $300,000 fee on it. And in fact, let's talk about that for a second. Is commercial a little bit harder than residential? Yeah, you know what it is. It's a higher barrier of entry. You have to learn to speak a little bit different language. The way you analyze the properties is a little bit different. The sellers you work with are more sophisticated. They're not emotional. They're not homeowners. They're investors. All this stuff I love, and you'll love it too once you get into it. Look, it's like riding a bike. You're probably going to skin your knees a couple times before you figure it out. But once you figure it out, it's easy. It just becomes second nature. You can become an expert at this. So yes, it's a little bit harder to learn. It's a higher barrier of entry. It's may take longer to get, not may, it will take longer to get a deal done. Let's just like put it all out there. You're not going to turn a deal once you get under contract in 7 days. You're not going to turn it in 14 days. Once you get it under contract, it's probably going to take 90 days before it closes and you get paid. But I'm not getting paid 10, 20 grand. Right? I'm getting paid 200, 300, maybe 400 grand on the deal. And so the lower the barrier of entry will always have the most amount of people in it. It'll always be the lowest paid strategy. That's just the truth. And I'm not trying to take a shot at anybody because I think every strategy is a good strategy. Start where you want to start and what's comfortable with you. But if you want to start making more and start taking home bigger checks, you have to improve your skill set and level up and move into an arena where there are less players, right? Less competition equals bigger paydays. Bigger price points equal bigger paydays. I mean, that's just common sense because if I have a $225,000 house under contract, I can't build in a $225,000 fee. It's not possible. This is what I don't think a lot of people think of. It's so much easier to absorb fees on a commercial property. If I have a $10 million property under contract and I build in a $250,000 fee, 2.5%. That's a 2.5% margin is all I built in. Does everybody follow me on that? Like on residential, you'd have to build in 100% margin or 60% margin. So you can't do that. That's not going to work. Then the deal no longer pencils. Building in a 2.5% or a 5% fee on a large asset, the deal still pencils. Like nobody's going to turn their head at it. It's not a big deal.
No, that definitely makes sense to me. My biggest assignment has come from a deal that was $1 million plus. So, like you said, we can't just give the seller $0 and sell their house, right? We can't take all their equity, So that definitely makes sense.
That's exactly it. Your biggest fee came off of $1 million deal. The bigger the deal, the easier to absorb the fee. Even if you just use a straight percentage. Let's say that your average fee is about 20%. Let's say it's 10%. Easy math. $250,000 house at 10%, maybe you could rip 25K on. That would be great. But 10% fee on 2.5 million is 250,000. Right? The same percentage. It's just you're dealing with larger dollar amounts.
Okay. Let's talk about a few different things. Now that we've got an idea of how to find the leads, we're going to Google, we're looking at these different places, and we're starting to reach out to these people. We kind of understand what's going to make them motivated. They're probably, their 60s to 70s. They've been doing this for a while, and it's mostly tired landlords, you think, that are willing to trade that potential equity for speed and convenience?
I think that's the most common. There's other reasons. Maybe somebody's looking to move up into a bigger asset and they want to 1031 that money. They have something else they want to buy, or approaching retirement, and you just catch them at the right time. A big reason our biggest avatar is that 60, 70, 80-year-old that's kind of a tired landlord, like, yeah, you know what, we love this, but maybe it is time to sell.
Got you. Okay. And then we've gone over self-storage. Let's talk about multifamily. What are the cap rates that buyers are typically looking for in order to pick up a property? Where, and I know it probably varies, based off of location, but like generally, where are buyers looking to make an acquisition at? What cap rate?
So cap rates are much more subjective in multifamily than any other asset. So back to RV parks. Like an RV park, I know that buyers nationwide are going to pay between a 10 and 11 cap.
Okay.
That's what they're going to pay. Storage, very, very similar. A lot of your assets are very similar. Multifamily is so market specific. It's very sub-market specific. Like California cap rates compared to Memphis, Tennessee cap rates they're just going to be huge discrepancies. So you have to be able to determine what market cap is in that area. And then just a good rule of thumb, not an exact science, a good rule of thumb is a couple points higher. So if you find in that area properties are trading, most multifamilies selling between 6 to 7%, you need to get the property under contract somewhere between 8 to 9 at an 8 to 9% cap rate. It's market specific with multifamily.
Mm-hmm. Okay. 8 to 9 for multifamily.
And if you really want to break down multifamily, this is what, again, I keep saying pick one asset. Multifamily, some buyers will buy them pro forma. And so you want to take a look at how many units, what market rents are, take the number of units, say it's 10 units, market rents are $1,000, 10 times 1,000. Okay, so now we're at 10,000. You determine you can bring in 10,000 a month over a year. That's 120,000. 10,000 times 12. Once it's fixed up and leased out at 120,000, then you can divide it by a cap rate and come up with a price. Multifamily is a different animal, guys. This would be my suggestion. If you're already into multifamily, or if you want to own apartment complexes, then dig in and learn multifamily. But when it comes to wholesaling or even buying, multifamily will be the most competitive asset class that there is. So if I was new and wanting to learn this, I would pick something like self-storage, mobile home parks, or RV parks. There's a little less competition. Self-storage has definitely stepped up a lot over the last 5 years. It's gotten very, very popular, but I would start with one of those assets. They're going to be much easier for you to underwrite, to determine value, easier to negotiate, and there's still a ton of buyers for them.
Okay, so for RV parks, I know that those are popping because I've actually seen members of our community doing big numbers with those, and they do all sorts of different stuff from cash to actually doing seller finance notes and all these things. They get real creative. Would you suggest going after properties that are listed on market, or are you specifically looking for deals that are not on any sort of MLS?
Depends what your goals are. If you're looking at buying it, why not look at what's on market and speak with some brokers and put in some offers? You can potentially find a really good deal. But we wholesale. That's what our entire business is we wholesale. I don't touch anything on market. I don't touch anything listed with a broker. It's brokers will blow up the deal. Maybe we can get the price, but they're not going to accept our terms. It makes it extremely difficult to move to an end buyer. It's not worth my time and energy. I put my energy and time into something that has a high probability of success. So I don't touch listed properties. I only go off market.
Okay. So
I
let's
want
talk.
to have control of the contract. Nobody.
Got you. Let's talk about the disposition process. I mean, let's say you've got a deal. It makes sense. It's a good cap rate, or maybe that's not why an investor wants it. Maybe it's got great cash flow. What are you going to do to get it sold? You know, are you going to be throwing these on the MLS? I mean, how is it that you go about finding buyers for these deals?
No, so we have a few different phases to our disposition process. If I was teaching you how to do it, you need to start building a list. You know, as you're calling sellers, and if somebody says no, they don't want to sell, ask them if they want to buy. And if they do, get their criteria. Start building your buyer list. Um, there's a lot of different ways to start building your buyer list. But if you're new to this, and what I again would suggest is partner with somebody like myself. It doesn't have to be me. Partner with somebody else that already has buyers, because acquisitions and dispositions are two separate businesses. You know that already if you're in residential, right? They're two separate businesses.
Absolutely.
If you're new, you should get really good at acquisitions, not dispositions. Because if you have a property and it's a good deal and it's under control, if not you, somebody's going to be able to find a buyer for you. Okay. You could have all the buyers in the world, but if you don't know how to find good deals, it doesn't matter. So get good at acquisitions, because if you learn how to find good off-market deals, get them for the right price under contract, you're now in control. If you want to keep it, money loves to make money. Raise the capital. If you want to wholesale it, let's find a buyer for it. It just gives you multiple exits. So you could we talked about this offline.
Mm-hmm.
I would say 80% of our deal flow now, again, my model is a little bit different, come through my deal partner program, because I just teach them acquisitions. They go out, find it, they bring it to us. We go under contract, and then we dispo it and we split profits on the deal, right? So that's what I would do. Like, find somebody like myself or somebody else, learn the acquisition piece instead of trying to learn both. Doesn't mean you can't eventually do dispositions, but learn that first so you know how to find really good deals. Here's what our disposition looks like. When we get a deal under contract, the first thing that we do is we're going out to our quote unquote VIP buyers. Okay. Buyers from our buyer list that we've built over several years of doing this. It looks like it fits their buy box. We're going to give them a phone call, not a text, not an email. We give them a phone call. Hey, we just got this under contract. We're going to be taking it to market in a few days, but it looks like it fits your buy criteria. So we're giving you an early look. Take a look at it, underwrite it. All the docs are in the due diligence folder. If it's something you want to make a move on, let us know within the next 48 hours, because we're taking it to market. So we're creating some urgency. We're giving them some exclusivity as well, right? They're getting an early look at a property, and hopefully we can get to contract that way. If not, then we're going to our email list. So just a list of buyers that we built over the years and years of doing this, and we're going to start. We package it up, we send it out, we get NDAs, and then we share docs with them so they can underwrite it, and we'll move it through email. We're still reaching out to them. We're still trying to make as many touches as possible, sending texts as well, setting up showings of the property, of course, answering questions. If it doesn't move then, because the clock's ticking on our due diligence, depending on how it's positioned with the seller, we'll look at other dispo options like Facebook groups, investor lift. For big stuff, investor lift really isn't a play for us, but like a 20 site RV park, perfect for investor lift, because it's a very low barrier of entry. There's a lot of people in residential that want to get into commercial, and so maybe it's something they can get into, because it's not a $5 million number, it's $700,000. Right? It's something they can actually get into and get started, especially if we have seller financing on it. It makes it very powerful. But that's our process. That's what it looks like. We have a phase 1, a phase 2, and a phase 3.
Okay. And guys, this is incredible information. If you're not already, you need to be taking notes. You need to be filling up your notebooks, ladies and gentlemen. Like, you got to make sure that you're replaying this as well, because Trent, you're offering a lot of really valuable information. It's really instruction. It's actionable information that people can start going out and finding these deals. And I'd hope that there are people that are in here that would want to focus on finding these deals and then bringing them to Trent, right? And getting them sold, working, tapping into his experience to understand, okay, I've got an idea of like what I need to do to find a deal. Now I'm taking action and I'm looking, I'm on the hunt. Okay, we might have something here. Let me bring this to Trent. And if it actually makes sense, let's break bread. Is that kind of what you think the process should look like? Or what would somebody do that's like really interested in this and that actually wants to take action? How can they, do something about this?
I'm glad you asked that because, yes, 100%, I'm willing to do that, but I want to set a very clear expectation on how that works. Because what I've had happen in the past, and I don't want to happen here because I don't want to waste anybody on this call. I don't want to waste your time, and I don't want to waste my time. Is I'll have people, they'll email me or they'll DM me a property with an address and say, hey, Trent, what do you think of this? I don't know. Like, guys, if I want addresses of properties or just properties for sale, I could have a broker send those to me. Like, we have so many deals that we're working in underwriting. I'm not going to like take a look at address, dig in, try and call them and get the docs. Like, no, like I'm just being honest with you. I'm not trying to be a dick, but I'm not even going to look at it. Okay. But would I take a look at a deal that you spoke with the seller? They said they were open to selling. They gave you a price, and you got the P&Ls, their profit and loss statement. You got their T12, their trailing 12 months of rent. You said, hey, Trent, these guys want to sell. They want $4 million. I don't know if it's a deal or not, but here's their P&L and T12s. Would I look at that? 100%, because that's different, right? That's a warm lead. So if you're new to starting this, I think sometimes it can be overwhelming to say, gosh, I got to find somebody who wants to sell. I got to get their financials, but I still don't fully understand how to underwrite it, how to come up with my number, negotiate with confidence to get it for that number, and then I got to try and dispo it and the whole thing. If that's not overwhelming, awesome. Go fucking get it, guys. Like, go get it. Bring me a contract. You have it under contract. You want to leverage my dispo team. You do acquisitions. We do dispositions. I split that 50-50. That's what I do in my deal partner program, right? Because we're training them up to do that piece. And that's why we'll split 50-50 because they're doing acquisitions, we're doing dispo. But if that's overwhelming, let's just simplify this and compartmentalize it to the first piece. The first piece of this puzzle is creating a list off of Google, calling and seeing if somebody wants to sell. If they do want to sell, get a price. How much do they want to sell it for? And they're probably going to say, well, Carlos, you called me. Make me an offer. So separate yourself a little. Say, hey, no, man, I'm not the decision maker. If I had $10 million to buy this property, I'd probably have people calling for me too. This is just the questions I need to ask so I can take it back to the team. They'll underwrite it. Then the partners will come back and make you an offer, right? Separate yourself. And then they'll lower their guard and say, well, I want to get $4 million. Okay, great. Can I get the P&Ls, your profit and loss statements, and your T12s? Have them send that to you. Just focus on that one little piece, because you'll get really good at that. Getting past the gatekeepers, having that conversation, being able to speak with confidence, being able to create that separation. You're not the decision maker. And that way you don't paint yourself in a corner. And some people like to posture and we own 20 self-storage facilities, and then all of a sudden the seller's asking some questions and you don't know how to answer. Well, now you're a liar, and nobody's going to work with a liar. Like, well, I don't own them. The group that I've been tasked to find properties for does. And this is, if your property looks like it fits their criteria, this is the question. If you're interested in selling, these are just the questions and the documents I need. And then I'll take it back to them and they'll come back with an official offer. So just focus on that. Calling, do they want to sell, get a price, get their docs. Now, if you have that and you hit me up and say, Trent, I got somebody who wants to sell. I have their P&Ls. I have their T12s. I have a price. Can we partner on this deal? 100% we can. We will take it over from there. But this is where I want to be clear. We don't split 50-50 on those because you didn't do 50% of the work, right? You did a small percentage of the work. We still have to underwrite. We have to contact. We have to negotiate, get it to contract. They may say no to our offer, but if they do, then we got to dispo it. So what I do is I kick people back 10% of the acquisition fee. Now, that maybe doesn't sound like a lot of money, but 10% of $300,000 is a hell of a lot more than 10% of $30,000, right? We're not splitting grapes, we're splitting watermelons. And the cool thing about that is you're now learning the business as you're doing it. In fact, Ethan, if you saw my Instagram, he is one of our deal finders. That's all he did. Call, see if somebody wanted to sell, get the docs, send him in. He's 19 years old, and he was doing that. But as he was doing it, he just kept learning more and more about the business. He now just took his first property, his commercial property, all the way to contract. He's never done residential. He'd never wholesaled residential. He doesn't even own a house. He's still living with his mom.
Wow.
But because he was in it, doing it, he learned the process. He just got his first commercial property under contract. I posted it on my Instagram a couple weeks ago. We're just pulling that right now. We had 3 people walk it last week. We expect an offer on it by the end of this week. And he's this close to getting an $8 million property under contract, his second one. This is somebody who knew nothing about commercial real estate. Now he sounds like an expert. But he didn't try to eat the whole elephant at once. He started with one piece, if you guys are tracking with me. Start with the one piece, and then you can keep learning and adding to it.
I think it's important that you said that because you don't have to have everything figured out, to get started. And just to get started, you can seriously make some life-changing money, that can put you in a position to get to that next deal, but also to kind of give people a mental framework that these deals are abundant. Trent, how many of these types of transactions do you think go down on maybe like a yearly basis? How many people are actually selling like wholesale commercial properties?
Yeah, that's a great question. I wish I had the answer for you, but I'd just be making it up. But now I'm going to find that out. That's something I'm very interested to know what that number looks like. Oh, like right now we have 47 million under contract. That's actually not true because we just got another contract yesterday and we should have another one by Friday. So we'll be north of 50 million under contract. Let's say that only half of those move. That's still $25 million in assets being moved as a wholesaler, guys. And I'm not the only guy that does this. Now, it's not near as competitive as residential, where everybody and their cat and dog are wholesaling. Like, wholesaling residential is the most competitive strategy in the space. But whenever there's an opportunity to make money, there's still competition. So there are other people that do what I do. Here's the really cool thing, though. Like the commercial real estate buyers that we work with, very sophisticated buyers. Some of them are private equity guys. Some of them are just a couple people that are using their own capital. Some of them are funds and the REITs. I hear the same thing from all of them. We need more deal flow. We need more deal flow. If you get something else, send it to us. We want to look at it. This isn't the guy getting a hard money loan and doing a fix and flip. These are players. And when you have capital, you have to place it. The bunch are looking to place the capital before the end of the year so they can defer their taxes. It's a different ballgame.
So would you say it's abundant? I mean, this arena is pretty much a blue ocean?
Absolutely. For somebody who's willing to put their head down and work, here's who this will not work for. So let's just weed some people out. People who need a very quick result. They want to see a deal closed in 30 days. You're not going to get a deal closed in 30 days. If that's what you're looking for, this isn't for you. Maybe down the road, but right now it's not for you. People who are going to give up after 60 days. Because you're still not going to have a deal closed in 60 days. You're learning the basics, you're learning the language, you're building your list, you're making calls. Once you get one to contract, it's going to take time to close. Sometimes deals fall out. Come on, let's just deal in the real world. No pie in the sky bullshit. Let's just deal in the real world. But let me ask everybody on the screen this question. If you knew that if you just dug in and committed to something 100% for a year, for a full year, but it would change your financial life and your family's financial life forever, would you commit a year to it? If the answer is no, this isn't for you. If the answer is yes, this is for you. But then my challenge to you is commit a year to it. Because here's what's going to happen. 3 months into it, you're going to want to pull your hair out. Say, am I even making progress? I don't even know if I'm making any progress. Fast forward 6 months, let's say you got your first contract. This is going to close. You're like, okay, it's starting to work. Fast forward a year, because you've been doing follow-up, right? Building a pipeline, just like you do in residential, fortunes in the follow-up. I can't tell you how many deals we have right now that came back to us from 4 months ago, from 6 months ago. They didn't accept our offer. They've come back to us, say, is your offer still on the table? So now we're taking the contract 6 months down the road. We had one that came back to us 9 months after we made the offer. They said they had a better offer. We said, great, take it. If anything happens, if it falls out, let us know. They're back to the table. We have the contract on it. So you fast forward a year, instead of having one contract, now you have 4 or 5 contracts. You're starting to get some momentum. You have this pipeline that you built because you've been persistent. You got to be consistent and persistent. You can't measure a deal until it's done. And that's why people quit, because they're 3 months into it. Like, I still haven't done a deal. This doesn't fucking work. And they quit. No, you quit. What you can measure is that I called for 3 hours every day. You can check that box at the end of the day. Either you made the phone calls or you didn't. That's the activity that'll get you to the goal. So if you're persistent and consistent, you get a deal. A year later, you got multiple deals in the pipeline. You fast forward 2 years, guys, you're living the life that you want to live. Like, you've sharpened your skill set. You've dialed in. You refined your process. You've built relationships. You've become a professional. You'll be a completely different person if you commit to it for a year. You will. Just most people aren't willing to commit for a year. They want something to get rich quick.
Absolutely. Ladies and gentlemen, a wealth of knowledge shared in this stream. Trent, I would like to ask you about some of the lingo, and I want to be mindful of your time. How are we on time?
We're good. We got a few more minutes.
Okay. Let's talk about some
I
of
don't
the
know about
lingo.
you guys. Happy Thanksgiving, everybody. I had a bunch of family flying from Houston. Yeah, so I got to go meet them.
Oh, man, I appreciate you making time for this. I know Thanksgiving is going to be huge. My birthday is tomorrow. It's Thanksgiving as well, so I'm excited.
Really?
Yeah, this is an early
Happy
birthday
birthday.
present to me, man. I know that I'm going to be definitely applying, all of the information that we're learning here. And I already have. I've already started to negotiate on a 113-unit motel, 113-key motel.
Exactly.
So
Yep.
I want to talk about some of the nuances, in the language so that we can come across as competent investors, because I was thrown off by one of the questions that an agent recently asked me, because like you said, it's a whole nother language and you got to understand these different terms and terminology. And I know that you're also sharing a drive full of resources as well. In that drive, I didn't get a chance to check it out. Is there going to be a section where we can take a look at?
Sorry to cut you off, but I threw in a glossary of terms, like huge, way more than. Don't try and learn all of it. There's probably stuff in there I don't know. Okay, but a huge glossary of terms. But the little hack I would give you is, once you pick an asset type, just kind of listen and pick up 2 or 3 things. And when you can say that in your initial conversation, just a few different things, is going to set the seller at ease. Like, okay, they know what they're talking about. They're not brand new. They're not just some cold caller on the phone.
Gotcha. So real quick before we go on ahead and
So
open
what's
it up. Well, I mean, nuanced stuff. Like, somebody asked me, like, what's the PIP? And I'm like, what do you mean the PIP? What is a PIP? Right? I've never heard.
You're dealing with the hotel. I always tell people don't start with hotels, because it's there's a lot of moving. But I love hotels. Like, I love hotels, and that's something I focus on heavily here in Phoenix. So a PIP is a property improvement plan. So like, if I have a flag on my hotel, which is a brand like a Hilton or a Holiday Inn or a Marriott or whatever it may be, each flag, you have to keep the property up to a certain level, their expertise. And so depending on the flag, every couple years, every few years, maybe every 4 or 5 years, they have a PIP. And that's the amount of money you have to spend or reinvest to bring your property up to their code if you want to keep their franchise, their flag.
Got you.
Hey, let me give you some other landmines that I don't want you to step on if you're going after a hotel.
Mm-hmm.
You want to know what the LDs are. And that's short for liquidated damages. So what that means is, if I'm buying a hotel and it is a franchise hotel, let's say it's a Hilton Garden Inn. Well, Hilton Garden Inn doesn't own that. It's a private owner that owns that, and they pay a franchise fee to Hilton to use that flag. Well, if I buy that hotel and I decide I don't want it to be a Hilton anymore, I can't just change it because there's a franchise agreement in place and that transfers with the hotel. So there's going to be liquidated damages that I have to pay Hilton if I want to get rid of that flag. Now, how much is that going to be? It depends on the franchise agreement, how long ago it was signed or who it was signed with. I've seen franchise agreements that were $8+ million in liquidated damages to get rid of the flag. Well, that changes that takes the deal from penciling to not penciling very, very quick.
So we got liquidated damages. We got to be on the lookout for the franchise agreements.
Yep, just ask for the franchise agreement. It'll explain what the liquidated damages are. And that's all part of the negotiation. If there are liquidated damages, you could negotiate that the seller is responsible for those.
Okay, and then what if it's not flagged? What if there is no association with any brand?
If it's not flagged, that's a non-issue. You don't have to worry about it.
Okay, and what about I guess if we're going for the PIP, right, the property improvement plan, does it improve the property to give it a brand name? Or does that kind of depend on the occupancy and like how it's performing now?
They're only PIP if it's a franchised hotel. If it's a privately owned, private brand hotel, it's your hotel. It's up to you what you do with it. There's no PIP.
Okay.
Well, let's do this for time so
Sure.
people can ask any questions if you want. Guys, I know it's a lot, but I want to go back to what I said. It truly is a simple business, and for those that are willing to take a little bit of time to learn it, God, it's absolutely worth it. Like, people typically want different things in real estate. They want something that's high profit or maybe low risk, and so you have to choose. I don't know of any other strategy that is such low risk and high reward as wholesaling commercial, because I'm not buying the property. All the risk takes place once you close on it. I'm not closing on the property. I'm just finding a good deal, finding an end buyer who buys it. They take on the risk, and I make my money in the middle. But I'm not taking small little fees of 10, 20, 30,000. I mean, I think we talked about this on the last call. Guys, I'll just share this with you, and I'll keep it super short. I was in residential for the longest time, and the way I kind of stumbled into commercial and wholesaling to commercial property almost happened by accident. It was kind of accident, but I saw the opportunity. I'm like, I'm going to find a buyer for this. I ended up wholesaling the very first commercial property I wholesaled. We netted a $300,000 wholesale fee. Come on, that's more than some doctors and attorneys make an entire year, and that was on one deal. We didn't close on it. It wasn't over years of appreciation. I just moved the paper from one side of the table to the other, signed an assignment agreement, netted $300K. Now, I'm not saying every deal is going to be that. I'm not saying that's what you're going to make. Some are less. Some are significantly more. Like, no joke, some people don't believe it. You can do 7-figure wholesale deals. Okay. But for me, that was like if you've never flown first class and then you fly first class, you get the hot towel and you get the warm meals and you get to the drinks and you get to board first and you get off first. It's like after that deal, it's like, I'm not going back to coach. I'm not. And so I was just bound and determined to figure out how to duplicate the process, how to systemize it so I can do it again and again. And that, to be honest, that was tough. Like, it took me a minute. It took I missed out on some deals that were 7-figure deals. 2 in particular that I could think of. I was this close to getting and moving that somebody else got that I would have made over $1 million on both of them just wholesaling. But it's a learning experience, right? I wouldn't be doing what I am now or where I am now had I not gone through that. And now I know how to handle those situations different. So all I'm saying is, look, what I do is not for everybody, and that's fine. That's the cool thing about real estate. There's so many different strategies. There's not a right or a wrong answer. But if this does resonate with you, dig into that drive folder that I sent you. Like, I put a ton of information in there, guys, like expense ratios. We talked about that on the last call. I didn't have time to get into it today, but that's a quick way to just back of the napkin your numbers and see if, without doing a deep underwriter, have to be a great underwriter or even have to have a spreadsheet. I use a calculator on my phone, and I can tell just having a conversation on the phone with somebody if their numbers are right or if they're wrong. So I threw that in there. I just, if it strikes interest you, just check it out. And always feel free, if you want, you can shoot me a DM on Instagram if you have a question.
Absolutely. Well, thank you so much, Trent. We really, really appreciate you and your time. Ladies and gentlemen, I'm going to link to Trent's Instagram and the resources here in the side chat. I want to thank everybody for joining us today, especially the day before Thanksgiving. Everybody has a lot of stuff going on, but they decided to make time to invest in themselves and their future. Guys, make sure to tap in with Trent. Follow him on Instagram. That way you can keep in touch with him and see about how to get into his Deal Finders program. Ladies and gentlemen, I appreciate everybody joining us. Trent, thank you, because I'll tell you, man, just from that first podcast that we did, that already opened my mind up, to see like a potential opportunity. That agent reached out to me off my Google campaign, and that began the conversation, and I had an idea of kind of where I needed to be at in terms of my offer. And while we're still in negotiation, and like you said, these things don't happen overnight. It's not a 30-day close. These things take time. I'm still in the arena. I'm still making the offers. I'm still talking to people. I've been able to connect with incredible, incredible people. If you haven't already, you got to connect with Becky. She is an incredible resource. She does all sorts of stuff from funding deals, underwriting the deals. Absolute amazing gem to have in your Rolodex. So I definitely got to make sure that you two connect. And I just got to say that I'm beyond grateful for you all and this incredible community.
Yeah, you've done a great job. I love seeing this, man. People just sharing information, people that are like-minded, wanting to level each other up, right? You got to get around people that are doing it. So I think this is really, really cool. It was fun to be a part of. Happy birthday, guys. Go enjoy your Thanksgiving. Enjoy that time with your family. And I'll just echo what you just said. It says a lot that you're on here, because there's a lot of other things you could be doing with your time, right? You could be having a drink. You could be just, but no, you chose to carve time out here to be here because you want something more than most people. So kudos to you guys. Thanks. And I'm sure we'll talk again.
Absolutely. Ladies and gentlemen, if you haven't already, make sure that you subscribe to the #1 most valuable real estate community in existence. Again, thank you all so much. God bless you all. Have a fantastic Thanksgiving, and we will catch you back here next week. Take care.